please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So still up about 0.3% on the benchmark indices. The mid-caps up a tad bit more, so a gain of about 0.5%. The Bank Nifty was in the red, but now marginally in the green. But Nigel, graphite stocks also on your radar?
You know, Rima, these stocks have been the biggest gainers in the last year, or 18 months odd. Graphite as well as HEG, both of them have had a big run. If you pull up the last 1 year chart, that'll tell you the picture. Now, in today's trading session, at one point of time, the stocks had lost more than 5% in today's trade. In fact, they've recovered a tad bit from there. Why was that? That's because of news of Graphite. That's the US-based player. They had priced the IPO at around $15 on a per share basis. That compares with the targeted $20 plus that the street was working with. So lower valuation is what that was given. So that's why, in fact, the street got a little jittery over there. Remember, the reason that they are doing this particular IPO is to give the PE an exit from there. So they want to ensure a smooth exit over there. But we were worried what's happening. I mean, have fundamental change in terms of graphite electrodes? We spoke to various sources in the industry. They said that there are no change in terms of fundamentals. The pricing is the same. The demand as well has looked quite good. And importantly, the street is worried, will there be more capacities of graphite electrodes that will come on stream? The answer as of now at least is no. Why? Because one of the raw materials is needle coke, and needle coke availability is not there. So even if we want to restart the graphite electrode, you're not going to be able to start that particular factory because there's no needle coke. So that's why, in fact, we did see a bit of a recovery from the low point of the day for graphite as well as HEG. In fact, we are at CNBC TV18, we happened to speak to Kalyani Steels as well earlier today, and he said yes, they are using graphite electrodes for sure, and he said that the prices are up between 15 to around 20% for this month, indicating that demand and pricing is quite strong. But this has come as a bit of a disappointment because this was supposed to be a bit of a boost for both these two stocks. But pricing this IPO low in the US, that's what's been a bit of a disappointment. But Rima, today, in fact, TCS, that's going to be the stock in focus. You're going to have, I think, a longish evening as well. They reports a set of numbers. What do we expect there?
Well, TCS, yes, will be reporting numbers post-market hours, so should be closer to 4:30 or 5. So the key numbers to track. On the top line, we're working with the dollar revenue growth of 2.5, 2.6%. In constant currency terms, it should be a growth of 1 to 1.2%. This would compare with 0.6% that Infosys delivered. Margins, according to our estimates, will improve by about 30 basis points on a sequential basis to 25.5%. And given some revenue growth and an improvement in margins, profits could be higher at 6,770 crore. But the key to watch in TCS will be whether there is an improvement in the BFSI vertical. That's banking, financial and insurance. TCS has been cautious about BFS for the last many quarters now. Even in the last quarter, BFS revenues declined by 1.5%. If they start sounding optimistic on BFS, then it can be a trigger for the stock, and it will help the company maybe post even double-digit revenue growth in FY19. Secondly, the company's margin, guided band up until now has been 26 to 28% in constant currency terms. Now, the company's missed that at least for the last 2 years, including FY18. So what comfort do they have with this guided band? Would they look to downplay it? A couple of the other factors to watch. One will be on retail, whether we can continue. The management had guided for a double-digit growth in retail. Whether that commentary still stays. Beat tax, imposed by the US effective FY19, that's base erosion and anti-abuse tax, is likely to hurt TCS by increasing the tax paid. So, if the management can quantify that, it will be also closely watched. And generally, what they have to say about, spending per se on wage hikes, people fear that, last year, IT companies didn't hire too much. Plus, they are all sitting on peak utilization. So now when demand picks up, they have to go ahead and pay the existing guys who are already reskilled as well in digital. So wage hike could be, it could hurt the margins of most of the IT companies. So commentary on that as well as the digital portfolio. We'll have to end with digital and start with digital. So digital portfolio and the strength there will be closely watched. But the stock is very close to its 52-week high. Just about 50-60 points away from that level. 3259 was the record high on TCS. Trading at premium valuations, expectations are high.
Absolutely, and what a big run the stock has had in the last 6 months on. But the other stock that's looking a little nervous is IndusInd Bank. It comes out with a set of numbers maybe the next couple of hours. Abhishek's with us in the studio. Abhishek, tell us, what should we watch in these numbers?
Well, Nigel, to begin with, the first one to watch will be the divergence. Now, what is divergence? Divergence is the difference in gross NPA that RBI states and the company reports. So that difference, if it is more than 15% between the two parties, then it will be reported. In Q3 FY18's analyst con call, IndusInd Bank did mention that, RBI's due diligence is over by December 17, and they will report whatever, if in case they have any divergence in Q4 numbers. So that one will be keenly watched. The last time for FY16, the divergence was at 560 crores, and with an internal adjustment of a repayment, the net divergence was 250-300 crores. So loan growth between 20 to 25% will be positive. Now remember that Ashok Leyland had a CV sales growth of 26% on a sequential basis. So that is a high yielding portfolio. The CV portfolio overall forms about 18% of IndusInd Bank's book, and in the last few quarters, the corporate yield has been declining, and these high yielding portfolios have been aiding the margins. So net interest margin, anything above 3.8% will be positive. Over the last few quarters, it has been around 4% level. The asset quality, anything in gross NPA below 1.2% will be positive. Last quarter, it was at 1.16%. Credit cost, that is provisions for NPA divided by advances ratio, anything for the quarter below 20 basis point will be positive. Last quarter, it was at 14 basis point. Our polls suggest an NII growth of close to 19%, while net profit to be at 952 crores. So that is up about 26.5%. Back to you.
Okay, typically steady numbers coming from IndusInd Bank. The stock is up 30% in the last 1 year. Thanks, Abhishek, for that. Let's toss it across to Ashwini Gujral and Rajat Bose to get in some market opinion and a few trading ideas as well. Ashwini, steady so far. Metals ruling the day today. Your thoughts?
See, basically it's a fairly narrow range both on Nifty and Bank Nifty, and it's possible that we take a direction in the afternoon session. The problem is, that financials are really putting a strong weight on the Nifty, and what could move up has now moved up quite a bit. So we'll have to see how the financials react in the afternoon, because the yield, etc., those parameters are going up, and market breadth is not the kinds which can take 10,600 out. You have broadly, 1:1 type of market breadth. So that way, I think it's useful to stay long in the strong spaces and short in the weak spaces. So Tata Motors is a sell with a stop of 340, target of 318. Tata Steel is a buy with a stop of 617, target of 640. And Coal India is a sell with a stop of 290, target of 274.
That's a very valid point, actually, what Ashwini is making as well. The yield, Rima, has moved up by nearly around 10 bips in today's trading session itself, and from the lows that we saw of around 7.17, 7.15, now it's moving closer towards the higher end of the band. Remember, it corrected from around 7.8% all the way to around 7.15%, and on the back of that, we saw, all the NBFCs that moved up. We saw some of these banks that have a high bond portfolio as well, treasuries. They, in fact, as well moved up. So just keep an eye out on that one. 7.64 is the last reading. That one should really be in focus, and that could give some direction for the second half of trade in terms of banks and financials, as Ashwini said. But let's get in Rajat as well into this conversation. Rajat, what trading picks do you have for us today?
I have two buy calls, and both in the April futures contracts. First one is CEAT. I would put a stop loss at 1594, and targets would be 1636 and 1648. CEAT today in the intraday session at least looking quite strong. And the other stock that is Just Dial April futures, I would put a stop loss at 452. And I'm expecting good momentum to come in. So 481, this is a two-day call and not just for today.
Okay, gentlemen, thank you very much for that. Let's get the early rates from the European market. Asia has had a good session, buoyed by the increase we've seen in commodity prices. European markets, the CAC and the FTSE open in the green, gains of about 0.2%, so mildly in the green, you would say. The DAX is absolutely flat.
Well, the markets have come off a tad bit from the high point of the day. We have BPCL that continues to move lower. That's down by close to around 5.5%. Now, Adani Ports was trading well in the green. Now it's on the verge of moving into the red, so keep an eye out on that one. And I think ICICI Bank, the bank index on the whole really is doing a relative underperformance, and that explains why, in fact, we are seeing that the Nifty has come off a tad bit from the top. Well, a couple of other stocks in the broader market, Suntech Realty. I think the intraday chart should come up for you of that stock. It's moved higher in today's trading session. Yesterday as well, it did quite well when the markets were falling apart. Even Srikalahasti Pipes, that's the other stock that we were talking about yesterday as well in terms of the overhang going on the group entity. And that stock continues to do well because in the last few minutes, it's moved up to the high point of the day. In fact, it's up close to around 380 rupees. There's been some cooling in coking coal prices, which will be good for them going ahead as well. And in terms of valuations as well, under 10 times on a PE basis. So that stock, in fact, is up as we speak, Rima.
All right, let's get you some more corporate opinion. We spoke to PS Jaikumar, the Managing Director and CEO of Bank of Baroda, on whether he thinks the February 12th circular is a given and if 66% of the bankers' nod is adequate to reserve a loan. We also spoke to him on where Bank of Baroda is placed in terms of the NPA provisioning. Listen in.
Now, whether you follow up with the customer on day 8 or whether you follow it on day 31, I don't know what difference does it make. So I think we should not really be fussed about it. It's a principle that identify the customer early and try to work at resolution early. Continuous discussions we are having with corporates to reduce the number of bankers and concentrate their exposures with fewer number of institutions so that there is far more alignment in the way things move forward. As far as Bank of Baroda is concerned, the data is in the public domain. We have some 5,000 crores that are sitting on, SDR and S4A under implementation. They do move into NPA, most of them, maybe many of them. Some will correct, and that would result in a bulge in this quarter. It will also result in increased provision in this quarter. But it is equally right to say that it should correspondingly in the next year reduce our burden. Whatever may be the outcome of this S4A, SDR eventually. So I hope the markets look into that. Quarter to quarter, our SMA 1 has been coming down. So that's a good pre-indicator that some point of time this course correction is going to happen, whether it's quarter 1 or quarter 2.
Better known to all the consumers on account of its brands like Govardhan, Go, Pride of Cows. That's the company which is currently on our radar because it's looking to strengthen its position in value-added products. The company has gone ahead and acquired the curd facilities of Danone, which earlier in the year shut operations for curd in India. Devendra Shah, the chairman of Parag Milk Foods, joins us on the phone line. Good afternoon. You have acquired Danone Foods manufacturing facility of curd yogurt in Haryana and you're paying a total of 30 crores for the same. If you could tell us what was the debt taken on for this acquisition, and with Danone's facilities coming on board for Parag Milk Foods, what will be the contribution of curd to your overall portfolio now, and what will the increased margins look like?
I'm really happy to announce this deal, acquisition of in the northern India, with a very good infrastructure and facility with one of the world's best standards of the Danone facilities. You know, in Indian market, curd in unorganized to organized sector is growing very rapidly, very high, and basically 33% market share in this total account into the curd segment into the North India only. We are very strong into the west and south with the curd infrastructure. Now with this infrastructure, we're entering into the Delhi and NCR and around that market, with the cow-based all yogurt, curd, fresh milk, and flavored milk and other products.
All right, Mr. Shah, if you could give us a few more basic details, sir. Currently, how much of your revenue comes in from curd? And post this acquisition, you're sounding bullish, you're talking about entering new markets. Where do you see this revenue stream from curd go to? And in turn, what impact can it have on your margins?
With this facilities, we adding around 150 crores turnover in next 2 years, direct to direct. But indirectly, we distribute more, around 35%. We take the growth 30 to 35% into the Delhi and NCR and other market with this fresh milk products. Into our curd segment, in total revenue, we are the 6 to 7% into the curd market. And curd is growing around into the Delhi and NCL market, around 1,500 to 2,000 crore market for the fresh curd. And you know that the Delhi and all this region dominated by the buffalo milk players all. And nowadays people are thinking more and more healthy product. And Parag milk all known for the cow milk only. And our focus to introduce this cow-based product, yogurt and curd and fresh milk. Yeah, with this in the north region, per capita consumption also very good. Yeah, our cheese business is also very good in the north region also.
Okay.
With this
so Mr. Shah, what you're telling us is
recently we launched our cow-based paneer also.
Okay. Mr. Shah, what you're telling us is that the yogurt market is about 1,500 to 2,000 crores in the Delhi NCR region, and you expect the Danone acquisition to straight away add 150 crores to your turnovers over a span of 2 years, right?
Yeah, absolutely.
How much can it add?
Yeah, it's directly, but indirectly we take the growth into our another product also in the cheese, ghee, and other products also. Okay. Yeah, once you take the everyday the fresh product into this market, absolutely it's your everyday consumption for the paneer and other ghee and cheese also. It's helped me in my other.
What were Danone's
product also?
What were Danone's financials? If you could help us with that. Because you're saying you'll add 150 crores of revenues directly, and you've only paid about 30 crores for the acquisition.
Yeah, we take the plant infrastructure, manufacturing facilities. We present what have with the Danone. Yeah, we invest into that, and some of money we invest into a little bit expansion and the procurement setup.
Okay, what were the margins of Danone's curd business?
Yeah. I don't know exactly. Okay. But you know, the Danone is a world-known leader in the yogurt segment. Yeah.
Okay, Mr. Shah, very quickly, if you could give us a sense of your milk procurement price, sir. Your milk procurement price, and also you said last time that maybe margins can go to 10%. That's on the cards?
Yeah, absolutely. Again, this year is the prediction of the rain, monsoon, is definitely it's good, and this milk prices may be continuously in next 1.5 years because rain is good. The stocks internationally prices also is similar like that, and the productivity also into the Indian market into the double digit. About the milk production.
Okay. Thank you very much, sir, for all those, for that view. We'll slip into a very short break, but before that, just keep your eye on Power Grid and NTPC. These are two stocks which have been moving very well this entire week. In fact, on a week-to-date basis, both the stocks have added close to about 4 to 5%. In the MSCI rebalancing, which will be announced, I think, on the 14th to 15th of May, it will be effective towards the end of the May. The expectation is the weightage of these companies will go up. At least that's the expectation, which is why I think they've seen some amount of buying in the last few days.
Focus to the commodity segment. Manisha Gupta joins us in the studio. Manisha, what are we starting off with?
Well, everything is running up, and so are the rubber prices. And while, of course, the crude oil prices at 2014 highs is a supportive factor, but also what's taken the rubber prices at a 4-month highs in the Tokyo markets and Shanghai is that China has put import tariffs, or rather has restricted imports of rubber, synthetic rubber that is, from US, EU and Singapore, and that's taken the prices on the higher side. Also, this is under the anti-dumping duty regulations that they have done that, and rubber prices clearly running up because of that. So 2 to 3% up in Shanghai and Tokyo markets is how the rubber prices are trading today. But as said, the crude oil prices is clearly in focus, where we are trading at 2014 highs, very close to $74 per barrel for the Brent prices and 68 for the WTI as well. So apart from the concerns about US reintroducing sanctions to Iran, it is of course the supply concerns from Venezuela as well, and we also have seen decline in US weekly inventories. Of course, it also has to do with with the fact that OPEC meeting in the month of June on what do they decide, what are the kind of reviews and import demand supply balancing in the global markets. All of those views, all of that decision, of course, would be most important to watch, and that is where the crude oil prices will take further direction from. But Tapan Patel of LKP Securities now joins us to give us sense on such strategies there. Tapan, hi, what is your outlook on the crude oil prices at these current levels? Do you still think it's a buy?
Hi Manisha, good afternoon. Yes, I think crude oil price has still room for upside, and we can expect $70 to $75 range in the near term. So supporting factors are, as you said, the bullish inventory data from US and supply crunch from Venezuela. Apart from that, we can expect some bullish comments ahead of OPEC meeting, and recently Saudi Arabia has bet for higher oil prices. So we can expect this bullishness to continue in oil prices. So at MCX, we can expect 4,580 for the short-term levels, and over the longer term, we can expect 4,700 levels in crude oil prices.
Tapan, also, how are you looking at the metals as a sector? Because we've seen nearly 6% of gains come in for aluminum on MCX as we speak. With the kind of gains that we saw yesterday in the evening session and morning right now, it's been nearly up 9 to 10%. Would you say the factors, or rather the concerns, have been factored in, or are you looking at much more gains for nickel from here on?
Yes, I think if you talk about aluminum, I think the gain has been done, and we can expect correction from tomorrow or from the next week, because the supply crunch factor from the Russia is already factored, and the vacuum that was created is already filled. So we can expect limited upside in aluminum, but I think nickel has still room to go upside, and we can expect 1120 levels in the medium term, because there are two news. One is the sanction related to Russia. So number two producer of nickel is nickel, and we can expect some sanctions coming in on that company also. And apart from that, BHP Billiton has also bet for the higher demand from EV batteries, which is also consumes the raw nickel for the producers. So we can expect that factor is also in a bullish.